YouTube, Louis here, and welcome to the weekend. Today I'm going to do some predictions, and this is based on the breakout of yet another war in the world. My heart goes out to everyone affected by the Israeli-Hamas conflict, both the Israelis and the Palestinians that are being used as a human shield for Hamas. Moving forward, what I want to do is focus on price moves and make a prediction based on what we have seen and tie that back to a correlation of what happened with the Ukraine war when the Ukraine war broke out and what happened to gold and silver prices as the Ukraine war broke out and people started rushing to safety. So let's go ahead and get into that. Somewhat of a somber video, but I think it is good news for precious metals investors. Of course, we had been languishing for some time recently, down here a little above 1800 for gold and under 21, I believe, for a short while for silver. We thought that, or at least I thought that, we would see a little more weakness and silver might touch 20. Gold might get into the high 1700s. But then we had the most recent event, and that event was, of course, the Hamas attack on Israel, which is not only a significant and dastardly thing that happened. It is now escalating and is taking on proportions that are clearly going to involve more death and destruction and more countries being dragged into the conflict. We have to watch, of course, we have to watch Palestine, we have to watch Syria, and we have to watch Iran. And of course, all of this could be somewhat of what do I want to call it? It could be an event that has somehow been backed by the Russians. I don't see this de-escalating anytime soon, and I see the activities as continuing to escalate. I see the U.S. as getting more and more involved, and the first thing that will happen is we will start allocating billions of dollars to the war. All right, so, that's what I think is going on politically. Let's get back to the timing of this event. And what happened when Russia invaded Ukraine? When did that happen? That happened on February 24th. Let's watch what happened to the gold price on February 24th. So let's get there on this JM Bullion chart. Gold was at $1,811, and we had a spike up to a high of 2,052. That is the all-time high, I believe, or pretty close to it. What period of time was that between February 24th? That was May 3rd. So we've got March, April, and about 10 days. 2 months and 10 days after the conflict began, and that's when gold started to pull off its highs. What was happening? There's only two variables that I'm really going to look at for this prediction, and while there are dozens of variables that are important, I'm only going to look at two and see what you think. One is obviously the breakout of war and the escalation in price, and how long that took to reach its peak. The second one is going to be interest rates. And one of the reasons that we saw gold pull back is that right around May, let's see, we were in May, right around late April and early May, the 10-year yield started escalating dramatically. This was due, I think, to people expecting a soft landing, stronger GDP, more government spending, and the markets acting pretty strong, or about to enter an upward leg. So we had a rapid escalation in the 10-year right around the time that gold saw its high. Okay, right around this period here, and I think that is part of what was dragging down gold and silver, and I think that is a predictor possibly for a recession, which can also drag down silver. Let's take a look at the silver price. And here we have a 1-year price of silver going back to February 24. Let's see. Now we had a little rise. Silver was at $20.76. We had a dip down to 20.04, uncharacteristic of what was going on in the world right then. But you could have predicted recession, and as a result of war, and silver doesn't do well when production reduces. But right after that, we had a rise we touched 26. When would that have been? Right around the same time, beginning of May. Also, just when interest rates started to spike much higher. I mean, decades higher rates in interest, and that has been pulling silver down all along. But notice how silver and gold kind of moved in lockstep. One way to watch that is the gold to silver ratio, and here we go. And some time ago I said, it has been channeling between 78 and 84, 85, channeling. You could be buying and selling during that period and doing quite well. Well, we recently had a break up to 27.36 as silver was really getting pummeled. That's just too high unless we are in a pan sell-off, or we're in a depressionary environment. The stock market is just crashing. Of course, the stock market is down significantly, and that caused silver to hit some recent lows. But like a magnet, we come back to under 85 on the GSR, and I think we have potential to go back to 78, or at a minimum stay within the 78 to 85 range as gold does its thing. So here we are with this major breakout. All right, so that was, certainly the canary in the coal mine, that things have changed dramatically geopolitically, and now we have war on two fronts. Will it be three? Will it be more? I don't think things are getting better. I think things are getting worse. So here we are with a breakout. I think we could have a pullback on Monday, but I would expect gold to move up from here, very similar to what it did the last time. I think we could see a 2.5 month bull phase for gold and silver. All right, and silver being reluctant, of course, because recession is looking more imminent every time we look at the statistics. But remember, the GSR keeps silver in check with gold. When it gets too high, I mean, aside from really crazy exogenous events, it's going to stay in that 78 to 85 range, and so gold will drag silver up with it. So my prediction for silver is, where are we now? Let's go back to the silver chart. Gold, interest, silver. We are currently at 22.91. I would look to Kitco for the correct price, spot price on silver. Matter of fact, let me take a look at what Kitco says gold is 1933. And here silver is 22.84. JM Bullion's got it at 22.91. So I don't believe their price, but I do like their charts. Much better than the Kitco charts. The Kitco charts are just awful. I wish they would improve those. So here we are in the high 22s. I think we're going to make a run to 25, and I think we're going to do it over the next 2.5 months. This war is providing a move to safety. The war is providing a top in interest rates. So I told you interest rates are the other thing that I'm watching. Now, I think it is entirely possible that interest rates spike again. But for now, there is a flight to safety, and we have had a short-term top in the 10-year at 478. I thought it got higher than 478, but it's currently at 4.62, and everybody who was short bonds got crushed recently, but no comparison to those who have been long bonds. And I think that this could possibly continue down to 4.5 or so, and then we'll have to see. But that could also provide the tailwind for gold to continue to make its move, and then by virtue of the GSR, for silver to be dragged up along with it, possibly even exceeding it. If gold goes back to 2050, could silver go back to 30? I don't see silver. Let me see. Am I on a 1-year chart? I don't see silver going back to 30 during this bull. What I'm predicting to be a new bull run. I see it at 25, maybe a little over 25, maybe 26. But anything could happen. I mean, for silver to go to 30 and gold to 2050. Let's see, 2050 divided by 30 would put the GSR at 68. Now, because recession is looming very large right now, and the industrial part of silver always puts a lid on it, I don't see the GSR going to 68, but you never know. So I would say 25, 26 is your opportunity. If you want to do some selling up there, I think you could easily do some selling, but we'll be entering in a couple months the stronger seasonal period for gold. Then we've got this conflict, which could easily escalate into a multi-country conflict. Oil is one of the problems with oil and its effect on interest rates is oil has been spiking, and then it took a huge haircut last week, or was it the week before? So oil has been adding to inflation fears, and now we have more potential disruption in the supply of oil, with no desire on the part of Washington to increase oil production. So if oil pushes back up to 85, 90, 95, 100, that brings back inflation, and that could easily spike rates back up to 5% or so, maybe more. Who knows? But bonds, I think, are looking pretty good for the long term. Just my opinion. You don't have to stay in them forever, but if we get a reversal, the Fed looks like it is softening its rhetoric. Really hard to raise rates into a war that is clearly going to accelerate and bring the U.S. into it. I don't know. I think they may be done raising rates, but we have to watch oil to see what happens. CPI, PPI is pretty sticky up here, so I don't see them cutting rates. I don't see us getting that impetus for lower rates and higher metals for that reason. But there is a flight to safety from stocks to bonds, a flight to safety into gold. And I think we've got a couple month, 2.5 month period here where we're going to see some fireworks. Okay, so that's what I see. Let me know what you see and whether this conflict is changing the way you look at metals. I'm always happy to have them. I'm never happy when they're going down, especially if I've spent all my money. But there are still some good deals out there, although $1 higher than they were a few days ago. But still some good deals, and still plenty of silver and gold to be had if that's what you want to do. And for everybody else, let's just watch the fireworks and see if we can have silver really catch a heavy bid here. It's going to be hard to stop it if gold keeps going up, and I think both will. All right, have a nice weekend, and I'll talk to you guys later. Louis out.